Hi, and welcome to this week's look back at the major news stories that have impacted the markets in the last few days. And this week we're going to start slightly differently. Rather than looking at the UK inflation, as we seem to have done every week, we're actually going to have a look at gold and why is gold going up. Well, there were Fed minutes published this week, which gave grounds to assume, based on a lot of the wording, the easing of monetary policy. As a result of that, we saw the dollar index fall slightly, shares were up, and gold was up. But was that the only thing? Well, let's concentrate on gold. Media reports state that China is the most active in buying gold in the last 50 years. Now, it'd be fair to assume, I think, that was trying to reduce their dependence on the US dollar, maybe. And also, according to COT reports, hedge funds are predominantly long gold at the moment. Now, that's a bit of a change because previously they have been predominantly short. Now, the charts show that we tested the former resistance at 1720 earlier this week, now at 1760-ish, which shows there is still demand out there for gold, and it may well test the $1,800 mark. Now, let's not forget there is a Thanksgiving holiday in the US, so lower volumes than usual, lower activity in general within the markets, which may mean we need to wait until next week or perhaps even further ahead to see a clear breakout or even a clear retreat. But certainly there's been a lot of interest in gold over the last 7 days. Okay, we're going to swap back to currencies now. We're going to look at one in particular, and that's the New Zealand dollar, which hit a 3-month high earlier this week. So Wednesday saw the Reserve Bank of New Zealand raise their interest rates by 75 basis points to 4.25%. That's almost a 14-year high for interest rates over there. Of course, we're seeing this across the globe, so not a massive surprise, but the bank did note that a further increase is likely due to the stubborn nature of the inflation issues that not only is New Zealand seeing, but of course we are seeing across the world. Off the back of that, the Kiwi against the dollar, or New Zealand dollar against the US dollar, jumped to a 3-month high near the 62 or spot 6200 resistance level. Now, in the event of a breakout of a 6.62 resistance level, it could face immediate new resistance from the upper line of the descending channel that you can see in the chart. However, it's worth working out that the increase on the month so far has already been about 10%. So momentum may already be exhausted in the New Zealand dollar, but certainly one to keep your eye on. It's a minor currency, so not one perhaps you hear as much about. So do your research and never forget risk management techniques. Right, just stepping away from a specific market or pair at the moment, we're going to have a little look at a further COVID outbreak in China and what implications that may have. Now, Sunday, China reported almost 27,000 new cases of COVID. That's close to its daily peak back in April of this year. Now, obviously, we've seen with COVID previously, supply chain issues, resource demand dropping, and generally bad news for economies as a whole. So this is quite a major play story at the moment. Now, Beijing authorities said on Monday that they were taking measures to combat the virus in the capital. Schools and businesses have been closed in the hardest hit areas, and they are tightening entry rules into the city itself, which is not a great sign, obviously. Baiyun, apologies if I've pronounced that incorrectly, Guangzhou's most populous area, is under currently a 5-day lockdown, and rumour and media would suggest that may well be extended. Now, this isn't great news for the Chinese economy. The backdrop of COVID impact on the world's second largest economy could have some quite serious consequences, as we saw before. COVID could cause, for example, a fall in the oil prices we've previously seen. However, we did see a bullish reversal in the oil price just the other evening, showing demand is still there, which should slow down the decline in the price. Now, however, if COVID starts to spread aggressively, and I think most countries' sort of health ministries have said the winter is prime time for it, and we're certainly entering the winter here in the UK, we could see that reversal in the decline of the oil price change quite rapidly. And, any fall in demand from one of the major manufacturing centres such as China could see the price fall further. Obviously, it's up in the air, but we look at the normal market impacts of figures, etc., but COVID is certainly another ingredient to throw into the mix in the coming weeks. Now, finally this week, we're going to have a little look into the crypto markets and Bitcoin in particular. Obviously, crypto, one of the hugest topics over the last few years, but has been in the news an awful lot recently. Depending where you are resident and which company you use, not everybody can trade crypto CFDs. But we thought it's worth talking about this week. Obviously, the main highlight the last week, 2 weeks, in terms of crypto markets has been the bankruptcy of FTX. If you've any interest in any form of cryptocurrency, you can't help but have seen this story. But now the market and people involved in crypto quite heavily are talking about who's next to go bankrupt, which is obviously a worrying sign when that's the sort of market rumours going about. There has been talk about the crypto winter coming for some time. A lot of attention been focused on crypto.com exchange, the Grayscale fund. People talking about that quite heavily. But there's a new candidate which has appeared recently in the media. That's Genesis Global Trading. Now, according to media reports, they've been experiencing liquidity issues due to the level of withdrawals. Now, they market themselves as sort of an institutional high net worth client area, so withdrawals there obviously could tend to be quite large. It's also been known for giving loans to bankrupt and a media fund secured by the FTT token. They have had previously a warning of possible bankruptcy and hired an investment bank to study this scenario for them. And there is talk in the media of them contacting Binance and Apollo Capital for funding. Now, these types of rumours aren't great for any market, let alone the crypto market, which is highly volatile. Off the back of this sort of news, we've seen Bitcoin fall to 15,500, which is a new low for 2022. BTC against USD is moving in quite a pronounced bearish channel at the moment, and further rumour, or in fact further bankruptcies, could see it reach its lower limit quite easily. As I say, cryptocurrencies are very, very volatile anyway, and this type of background media talk, this sort of bankruptcy situation, troubles with withdrawals, is really bad news for cryptocurrencies in general, particularly Bitcoin being the largest of them all. This much fabled crypto winter certainly seems to be hitting. Even if you are trading cryptocurrencies via CFDs, use your risk management techniques. These are highly volatile markets, and that volatility doesn't look as though it's going to go anywhere soon. We wish you luck with your trading in the week ahead. Bye for now.